Did you know that the average American has 3 credit cards? This means a lot of people with multiple credit cards use them to manage their finances or to take advantage of credit card benefits. Whether you're a seasoned credit user or just starting out, understanding credit card secrets can help you make informed decisions about your financial well-being. Let's delve into the best-kept secrets of credit cards, the dangers of overuse, and actionable tips for achieving financial freedom. Secret 1. Cashback rewards and perks. Many credit cards offer enticing cashback rewards, points, or travel perks for everyday purchases. By leveraging these benefits responsibly, you can earn valuable rewards on your spending, effectively receiving a discount on your purchases. Secret 2. Consumer protection and purchase benefits. Credit cards often provide additional protection such as extended warranties, purchase protection, and fraud liability coverage. This can offer peace of mind when making large purchases or shopping online, as your credit card company may have your back in case of disputes or issues. Secret 3. Building credit history and improving credit score. Responsible use of a credit card, including timely payments and maintaining a low credit utilization rate, can help build a positive credit history. A strong credit history can lead to improved credit scores, which can open doors to better interest rates on loans and higher credit limits in the future. Secret 4. Convenience and security. Credit cards offer convenience, allowing you to make purchases without carrying large amounts of cash. Additionally, credit cards provide a layer of security, as you are not liable for unauthorized charges, unlike with debit cards or cash. Secret 5. Travel benefits and insurance coverage. Some credit cards provide travel-related benefits such as rental car insurance, travel accident insurance, and access to airport lounges. These perks can enhance your travel experiences and provide financial protection during trips. Con 1. Accumulation of high-interest debt. Carrying a balance on a credit card can lead to high-interest charges, resulting in long-term debt and financial strain. Interest charges can quickly accumulate, leading to a cycle of debt if not managed carefully. Con 2. Negative impact on credit score. High credit card balances relative to your credit limits can harm your credit score, as it increases your credit utilization ratio. A lower credit score can limit your ability to secure favorable loan terms or obtain new lines of credit. Con 3. Temptation to overspend. The convenience of credit cards can lead to impulsive and excessive spending, especially when the available credit limit is high. As a result, overuse can lead to financial instability and difficulty in managing payments. Con 4. Fees and penalties. Credit cards may come with annual fees, late payment penalties, and foreign transaction fees, which can erode the benefits gained from using the card. Con 5. Potential impact on mental health. The stress of managing credit card debt, especially when it becomes overwhelming, can have a significant impact on mental well-being. Debt-related stress and anxiety can affect overall quality of life and mental health. Tip 1. Create a repayment plan. Assess your total credit card debt and create a repayment plan that outlines how you will pay off your balances. Consider strategies such as the snowball method, which involves paying off the smallest debt first, or the avalanche method, which focuses on paying off the highest interest debt first. Tip 2. Negotiate lower interest rates. Reach out to your credit card issuers to inquire about lowering your interest rates, especially if you have a history of on-time payments. Tip 3. Prioritize high-interest debt. Prioritize paying off high-interest credit card debt to minimize interest charges and reduce the overall cost of repayment. Tip 4. Control spending and budget wisely. Temporarily reduce non-essential spending and create a budget to allocate more funds towards debt repayment. Tip 5. Explore debt consolidation options. Investigate the possibility of consolidating your credit card debt through a balance transfer to a card with a lower or 0% introductory interest rate. Alternatively, consider a personal loan for debt consolidation, which may offer lower interest rates and a structured repayment plan. Understanding the secrets of credit cards, both the benefits and potential pitfalls, is crucial for making informed financial decisions. By leveraging the benefits of credit cards responsibly, avoiding overuse, and implementing effective debt relief strategies, you can regain control of your finances and pave the way towards a debt-free future. Remember, financial empowerment begins with knowledge and action. All in all, I hope these insights serve as a valuable resource on your journey to financial freedom.